Lesson 5, the Waterfall Trade System. In Lesson 5, you will learn how to trade the waterfall and reverse waterfall trade system with reversal candles that work on all time frames and also in all market conditions. I will also show you how to use the real-time waterfall indicator for Thinkorswim that I personally created to help identify the trade or the waterfall trade setup. So let's do a quick recap for those of you that don't understand what a candlestick is, okay? Candlestick is basically where price opens at one price, closes at another price, and then it'll show you the high and low during that time frame. So, for example, we're looking at a 5-minute. If it's a green candle, you know price opened lower and then closed higher. If it's a red candle, price actually opened higher and closed lower. Now, the wicks represent the movement for the high and the low during that time. Okay, so price opened here, went as low as here, as high as here, and then closed here on the green candle over the 5-minute period. So, what we look for with the waterfall is we're looking at the highs, okay? We are trying to identify a trend, okay? And in this case, as you can see, we have a lower trend, okay? As price is falling, okay, we don't care about the lows of the wicks or the candles. All we care about are the highs of the candle. And as you can see, what we're looking for is every candle is making a lower high than its previous candle. So the high was at 76 right here, 1876. The next high was at 1875. Okay, so we're not breaking above the previous candle's high. What we're looking for in the waterfall is for price to be selling off. We want to see at least 3. Okay, that's one of our criteria is at least 3 candles with lower highs before we really get interested. The more candles with the lower highs, the higher probability the trade will work, okay? So, as you can see, we have 1, 2, 3, 4, 5, 6, 7 candles where prices made lower highs on every single candle. And then right here, okay, on the 8th candle, look at what price has done. Price actually is the very first candle, okay, that has broken above its previous high for the last 8 candles. Or sorry, 7 candles were on the 8th. So, as this candle is being formed, we're going to be watching, okay, we're going to be watching the time. So we want to see the very probably last 10 or 20 seconds before we place the trade where we do our homework. We could see, and again, if you put your mouse over the candle up in these areas, you'll see the highs and lows, okay? So during that 5-minute period, we made a high of 1866. We made a low of 1861. That's a 4.5 point range. Okay? Well, what we're going to do is we're going to put our entry 1 tick above and then 1 tick below the previous candle. So when this candle's done being formed, okay, because at the end of the day, this is all we really see. Let's see, is this, right? So we see it falling. Okay, we know there's maybe 10 or 20 seconds left, so we know the high is 1866. What we're going to do is we're going to put an order in at 1866.25, okay? And then we know the low of this candle is 1861.50. So our low, or our stop loss, will be 1861.25. That's going to give us a risk of 5 points 4.5 for the candle, and then we need to add 2 ticks, one for the entry and then one for 1 tick below the exit. Okay, but what this does is it gives us a pure risk-defined trade. We know exactly how much we're risking. If price breaks below that, we're wrong on the trade. Okay, this is, you're either right or you're right out of the trade, but it's a very high probability trade because we know that we've been selling off and hopefully the buyers will step in eventually. So right here on the very next candle, we could see price broke above and triggered our 1866.25 entry. Okay, now we know we're risking about 5 points on this. So how do we know where to exit? Well, we could do a 1-to-1 risk reward. You could do a 2-to-1 risk reward. You could say, hey, where could price potentially get stalled out? Right? Maybe if you get a quick 2 points, you could take profits. That's all up to you because we never know where price is going. This might be the low for the next 5 years for all we know. Okay? Because we don't know if price is ever going to pull back from this level. So I'm not saying, hey, just stay in and let the guy run, because he might actually go up, come back down and stop you out, right? So maybe if you do multiple contracts, you scale out. Hey, maybe you take one contract off at 2 points, you move your stop to break even, and then scale out, okay, as price keeps moving higher. But let's see what price does. Okay, so as we could see, price keeps going higher, right? Well, our entry was 66.25, right? Well, our 1-to-1 risk reward, where we're looking for 5 points, okay, because we're risking 5 points, would be 71. Well, on this second candle, we actually hit 1871, and this is where your target would be. And guess what? You're already out of the trade. You made your one trade for the day, potentially, whatever. You made $250, okay, on one contract. Maybe you do multiple contracts. Maybe you scale out. Okay, you scale out, move your stop to maybe break even or +2, okay, and hopefully you could just keep riding the momentum, okay? So this one, price went all the way up to 1877, right? We're looking at almost, 11 points. So you're risking 5 to make 11. So the other part of this trade is, see how this candle's purple? Okay, what this is the reason it's a purple candle is because we actually have a special indicator that I created that alerts me in real time, gives me an arrow, and also changes the color of the candle that actually stays that color even if price comes back down. Okay, so what happens is it visually and also on the platform, it alerts me to, hey, we broke a waterfall to the buy side, okay? And you'll also get a little message up in the corner letting you know, and that's when you enter the trade. Now, other things you could do is you could look for a pullback and enter on the pullback so you're risking less, okay? That's another way of trading it. So once you see it, maybe if price pulls back, okay, you can actually get a better fill and risk less, or you could buy one contract here, scale in, another contract here, and so on. Okay, and then all your contracts would be stopped out below here, but now you're able to scale in, scale out. But as you could see, price went up and never really retraced, so you only had one chance to get the entry. Now, this again is called a waterfall. What's a reverse waterfall? Well, a reverse waterfall is essentially the same concept as the waterfall, but now we're actually going to look for the lower highs, right? We're going to look at the lows of the wicks or the closing price, okay? But in this case, they're all mainly wicks, okay? And one tick below, we're going to enter to go short, okay, well, as you can see, price broke below right here, right? Because all we would have seen was this candle right here. So our entry would have been one tick below the low at 1872.75, okay, would be our entry. And our stop would be 1875.50. So we're risking about 2.75 points. Well, here's the problem, right? You could see price came down and then stopped us out very quickly. One of the keys to this is we're looking for reversal candles. We're looking for a nice trend, okay? We're looking for where price potentially bounces off a support level, a pivot point, something like that, right? Where it finds buyers stepping in. But we also want reversal candles. That's one of the most important things. As you could see, right here, a doji is a reversal candle. A hammer at the lows is a reversal candle, but if it's in between midway, usually not. Okay, we don't want to take trades. We want to take high probability trades. We want to see where price is selling, and then have a hammer or a reversal. Here we kind of rally all the way back up to these support levels, right? We could see, hey, potential double top with a shooting star, right? Or upside down hammer. Well, maybe this might be a good risk reward. Put my mouse over, I see we have 2.75 points worth of risk. I know add 2 ticks, 1 above, 1 below for my entry and stop. That gives us 3.25, and our entry actually would be 1874.50. And let's see what price would do. Well, guess what? It came in and it stopped us out and took us out. But here's the thing. It was actually a high probability trade because you had a potential double top. But you also need to look at the context of the overall market, okay, and say, hey, how hard is price selling off, right? Here, we could see where price is selling off, but still at the beginning stages. But down here, we see a really big flush with a nice reversal candle and price rallies, okay? These are what we're looking for. We're looking for the really hard selling, okay, with the hammer just for those quick little pops. But again, the other feature of this, okay, is we want to see nice reversal patterns, okay, like right here, where we actually only had about 2 points worth of risk, right? Nice sell, a bunch of red bars. Enter, and remember our stop goes here. Yeah, it came back, it tested about midway, maybe even almost towards the lows, but never took out the lows. And off those 2 points right here on this candle, you could have actually gained about maybe 20 or 30 points, okay, if price kept going higher. So here's another one, right? Nice sell, right? And then we have our entry, and it kind of had nice, decent rally. At least get a 1-to-1 risk reward, scale out. Remember, a couple keys to be aware of is market conditions and different type of market support and resistance levels. Also, you can always use an RSI and look for the RSI to be below 40, or as price is falling, you want RSI below 40 or above 60, okay, to go short. So if we're at 70 RSI, look for short reversal candles, right? Maybe hammers or something like this, like dojis, anything like that, near the highs to enter the short, because over 70 the market's oversold and it increases your odds of success. So that is the waterfall trade. I hope you enjoyed it, and next up will be lesson number 6.